Hey guys, I am Amit Kauri and you are watching Bino Bharat YouTube channel. Today we will discuss on the topic of will the US-Iran war crash the Indian stock market? Let's be completely honest, the Indian stock market has already been testing your patience for the last 17 to 18 months. We have dealt with expensive valuation, massive foreign investor selling and the AI threat to our IT sectors. And just when we thought the worst was over, boom, the US, Israel, and Iran conflict sent shockwaves across the globe. If you are looking at your portfolio right now, sweating and thinking, should I just sell everything and get out? Stop right there. In today's video, I am going to decode exactly how this war impact India and more importantly, why hitting that sell button right now could be the biggest financial mistake of your life. In section 1, we will discuss the real threat why India should care. Now I ask you, why does a war thousands of miles away matter to your portfolio? Just two words, crude oil. India imports a massive 85% of its crude oil, making us the third largest importer in the world. A huge chunk of that comes directly from the Middle East. In just the last 2 weeks, oil prices have already jumped 14 to 15%. And here is the scariest part. Iran has just blocked the Strait of Hormuz. This is the tiny, narrow water passage that handles roughly 20% of the entire world's oil supply. If this war continues and this route stays blocked, Morgan Stanley predicts that oil price could hit a staggering $120 per barrel. When oil prices spike, it's a domino effect for India. Our import bills rise, inflation shoots up, transportation costs increase, and corporate profits shrink. Because of this inflation, the RBI might delay cutting of interest rates, which the stock market absolutely hates. On top of that, whenever there is a global panic, foreign institutional investors blindly pull their money out of the emerging markets like India to reduce their risk. Now, on the section 2, we will discuss the biggest mistakes you can make. So things look pretty bad. Should you sell everything, sit on cash, and re enter when things are normal? Absolutely not, unless you are a short term trader using borrowed money. Here is why. You cannot time the market. Let's say Nifty is at presently for 24,500 and you sell everything today. The market drops a bit more and you feel like a genius. But suddenly the market recovers and by the time you realize things are normal again, the market is already trading way higher than your selling price. Remember the COVID crash? People panic sold, failed great for a few days and then completely missed out on the massive oil building rally that just followed. Now on the section 3, we will discuss on the proof from history. If you don't believe me, let's look at history. Just a couple of years ago, on February 24th, 2022, Russia invaded Ukraine. The exact same panic happened. The Nifty crashed 10 to 12% in a week, and mid and small cap fell 15 to 20%. Crude oil price then shot up 40% to nearly $130 a barrel. News channels were screaming that inflation was out of control and supply chains were destroyed for a year. But what actually happened next? By June 2022, oil prices cooled down. By August, foreign selling slowed. And by December 2022, less than 10 months after the war started, the Nifty hadn't just recovered, it smashed past 18,800 and hit an all-time high. The people who panicked and sold in March locked in massive losses. The people who stayed invested, stay put, or bought the dip made incredible wealth. Now, on section 4, we will discuss regarding the game plan, the action plan you need to follow now. So, what is the practical game plan for you right now? If you are doing SIPs, do absolutely nothing. Your SIPs are doing exactly what they were designed to do, buying more units at cheaper prices during a market crash. And now, if you are a lump sum investor, hold on to your high quality stocks and do not panic. Just clear out the fundamentally weak junk stocks from your portfolio. And if you have extra cash, start deploying it slowly and gradually into quality names. You can average down your quality stocks. What about specific sectors? Defense stocks look like they would benefit from a global war, but honestly, their valuation are just too expensive right now. Gold is structurally a great hedge during long uncertainties, but it can be volatile if the US dollar strengthens. So, my suggestion is stick to quality and keep it simple and diversify your portfolio, and you should follow the asset allocation strategy as per your risk appetite. Now, guys, I want to leave you with one amazing fact. Data from Edelweiss looking at the last 24 years shows that whenever the Nifty has stagnated for 17-18 months, like it has right now, it almost always massively outperforms in the following 1 to 5 years. Now, India's core story hasn't changed. Our demographics, digitization, and manufacturing growth do not disappear just because there is a conflict going on thousands of miles away. Volatility is simply the entry ticket you have to pay to get those long term equity returns. Guys, to become successful in stock investing, you should follow the discipline. You must always accumulate quality stocks in a staggered manner, and you must respect the valuation market offers. And if you simply follow the rules, you will be a successful investor in a long time period. So, guys, if this video helped calm your nerves, hit that like button and share it with your friend or family members who is thinking of panic selling right now. Subscribe for no nonsense financial advice. Stay disciplined, stay invested, and I'll see you in the next one. Happy investing. Bye bye.